Yeah, thanks for joining. We put together, me and Reed, we put together Hawaii Trading Academy for basically to create a community, especially locally. And you don't know too many people doing this without the unintentional things. So like a MLM, we're not that. So this is basically, yes, we're coming together and then we're putting together our experience to help people who want to learn about the markets, who want to trade. I myself have been trading for about 5 years, a little over 5 years. I'm a funded trader, and I trade futures and forex. And Reed, he focuses on forex. He's been trading that, and it's funny. Like I don't know if you guys know our story. We got together from Instagram. We just met up at Starbucks one day, and then we were all like feeling each other out, like not in that way, but yeah, seeing if we were, if he wasn't trying to pitch me something, I wasn't trying to pitch him anything, create a genuine, authentic friendship, and from there, like we knew, this was back in 2018, I think 2019, and we've been sharing trade ideas and whatnot, because he trades a totally different style from what I do. I'm a trend follower, swing trade, and he loves his technical patterns, breakouts, and short-term kind of holds. And so it's very, even though we have two different skills, we're still able to mesh and combine our knowledge and expertise and learn from each other, because you're always going to be learning. You're never going to master trading, plain and simple. You're never gonna master it. You got the $1 billion hedge funds guys. They're still learning. Because when they lose, it hurts. And it will humble people, right? You got those, like 2008. You got the financial meltdown, Lehman Brothers. If you guys read up on that, big billions lost within a matter of hours. And so tonight I'm going to be sharing my screen. So when you guys have questions, put it in the chat. I'm going to go over some awesome material. Tonight's topic is going to be consolidation versus trending. So identifying market cycles. So I know you guys are maybe at home, lots of stuff going on. Try to pay attention. If you can, write down notes. That's always good. This is always going to be recorded. And so good for you guys to just recap if you guys miss anything. If you have any questions, like I said, we'll do a Q&A at the end, see what you guys, what fits with you or resonates with you guys. We'll conversate. So let me go share my screen. Are you guys able to see that? Yeah, cool. So consolidating versus trending. So, like I said, tonight's market or focus is about market cycles, identifying what market you're in. So Thai Airlines, ZOM, futures, whatever, gold, corn, euro, USD yen. They're all different products. They don't relate to each other, but they are traded. They have market cycles you can identify. And what we're going to try to do, what we hope for you guys to do, get from this, is to be able to read the charts, identify market cycles, so that you guys can take on the opportunities, because there will be more opportunities presented with trading when you're in, for example, a trending market compared to a consolidation sideways market. So we're going to be diving into that right here. So I don't know if you guys ever saw this cheat sheet before, running around on the internet. A lot of this. So this is like the psychology of the market. So us as traders, this is what we go through. This is that roller coaster that we feel internally. So our wives or our coworkers may not understand why we're grouchy, because I'm in the denial panic mode, and because I thought I was killing it. I thought I was gonna be a billionaire tomorrow because my trade was running, and then the market just tanked. Everyone could relate to that, right? And so this is just nice example I see, and I feel like a lot of people can relate. Oh, every trader can and will relate to this. You will go through this cycle at some point of your trading career. Hopefully, sooner you could experience it so that you could learn from it rather than later, you know? So that was just something I put together, or I found and I want to share with you guys. So let's do a recap for the past 6 weeks, I think. We've been doing lives every Tuesday. And what we're doing is we created like this foundational course right here. So we started with journal your trading, aka, and in addition to back testing, we taught you guys how to journal, gave you guys a basic template. You could download that in our Mighty Networks group, and then it's on Google Sheets. Download it, gives you a real basic setup so that every time you enter a trade, you can just input things on Google Sheets. Basic info of why, documenting why you're taking that trade. What do you see? What is your mood, right? And because that's real vital. Like when you're on the phone or on the computer submitting a order, there's a lot of things going on, and you gotta document why you are taking actions, taking necessary decisions of why you're going into buying these shares. You know, oh, because I heard news, or the owner is doing this. This is why I'm gonna go invest more, and that's perfectly fine. And so at the end of the day, the goal is to have accumulation of data. With journaling, you're gonna have like a week worth of trades or a month worth of trades. You're gonna go over it, and it's gonna be your best teacher, because you're gonna learn so much about yourself. You're gonna learn like why you do make the same mistakes, why you have like this FOMO feeling, fear of missing out, why you rush into trades and whatever. So journaling is really key. We started with journaling, then we took it to brokers. We shared with brokers and platforms we use for ourselves, and something we give you kind of an idea of how to look for proper brokers, because this is where a lot of people get scammed. You know, people who are just starting out, they get approached DM from all these random people saying like, oh yeah, you know, I'll give you this, give you $300 to trade, join my broker, blah, blah, blah. So went over that. These are all pre-recorded. I mean, we've already gone through them. Fundamentals and technicals, those are two different approaches that you can have your philosophy with the market. So the way you approach it, are you going to trade just strictly on news? Or are you going to trade on what you see in the chart? Plain and simple, right? Then we did the candlesticks, identifying the different candlesticks, where it comes from, time frames and analysis. That was last week. That was a good one. Just setting up your chart and how to really just dive in. And your chart setup will change over time, you know. So today is going to be consolidating versus trending. So market can move three ways, pretty much. Three ways: up, down, right? They're both trending. Sideways, consolidating or correcting, right? Three ways. Consolidate. I like to use definitions for these terms because I don't like to just come up with my own meanings, okay? So I pull it from dictionary.com, right? To combine a number of things into a single or more effective, coherent whole. Consolidate, right? Combine. Consolidating markets. So these are going to be good to highlights that you guys can write down or take a screenshot, whatever, because these are the characteristics of a consolidating market. On the right side, you see with the chart of like, this is what a consolidating market looks like. It's just sideways, you know. So it's ranging, no newer highs, no new higher highs or lower lows, right? We got long wicks or fake outs. So like this part right here where it's touching the purple line, long wick, that's a fake out right there. And then you got this other one on the right side where it's piercing the purple line. Could be a false fake out, a false breakout, right? So bigger time frame, like daily bars or candles will show price moving sideways, right? So like depending on your time frame, it's just how you view your charts, right? After a good run, you can see price to whipsaw. So, for example, I mean, we'll show more examples later in the charts, but say Bitcoin, for example, if you guys are familiar with how it looks right now, it went up, tank went down, and then it's sideways right now. It's kind of in this range. So, it had a good run down, consolidation normally will happen there. Or if it had a good run up, consolidation will happen there. Indicators. So price. Let me move this real quick. So if you're using a simple indicator like a moving average, you want to take into consideration what your moving averages are doing. Moving averages, that's going to be a separate what you call conversation piece because
Ben,
that's yo.
Ben. Um, Charles?
Oh, you
Yes.
guys had
Oh,
question?
yeah,
Sorry.
yeah, I had a question.
Sorry. Let me go pull up my. Sorry, I didn't see the.
Sorry, real quick. That's a good question. I
Oh,
always ask,
yeah. Let me. What is the question? What was the question?
heck, is it important to
Important.
have a
Oh,
journal?
right. So as far as a journal, um, it could be online. I'm old school, pen and paper, right? But the main important thing, you can make it wherever, however you want. The important thing is filling it out, being consistent, giving yourself data so that you can look over, right? So at the end of the week, what I would do is I would have my accumulation of trades from Monday to Friday because market closes Friday. Friday night or Saturday morning, um, I go buy myself a couple hours. I'll go to the nearest Starbucks where I can focus, and then I just go trade by trade. I'll have a chart up, and then I'll go through my book and be like, okay, I took this yen trade long. Have the chart. Why didn't it go? It's a loss, right? Why didn't it go accordingly? Oh, it's because of this, and then I can match it up with what I was doing at the time. Oh, I entered the trade while I was driving. You're not supposed to do that, but just for example, right? So that's where as long as you have a journal somewhere to document consistently, that's it. Plain and simple. It could be digital or be a book, right? So I'm gonna go back to my good question, by the way. Go back to the share
How,
screen.
how frequent should you
Yeah.
make your chart?
What was that?
How frequent should you make your calculations weekly or monthly? And then that's how you kind of decide whether you're gonna pull out or you're gonna split out, or how should we strategize?
Yeah. Good one. Good one. Overall, just a rule of thumb, bigger time frame always rules. Okay. As far as and I'm gonna show you an example of it later. So yeah, let me find the continue my answer when we go through the thing. Yeah, no worries. Good. Keep it coming, man. Keep it coming. It's really good. Really good. So, low volume. So we're going back to the highlights of what makes a consolidation market. So, these are the conditions you're going to see in the market for it to become going sideways. All right, consolidation or correction. You're going to hear different words. Pretty much sideways action. Price ain't going nowhere. Okay. So another key point is low volume, right? So New York Stock Exchange, for example, trades 3:30 our time in the morning till 11 p.m. I mean 11 a.m. Sorry, and they have a lunch break during for New York time, and you're gonna notice that trading volume will be very low during that time, and trading volume is gonna rise at the opening and the closing of the day, right? So you're gonna see consolidating markets are going to be more pronounced during low volume times, right? And so another way to just see if your market is consolidating, draw lines at the recent high and the recent low. So these purple lines All I did was just pick the recent high and then the recent low, and if price is just ping ponging in between your two lines, then it's kind of a indication. I'm like, okay, price is going sideways. That's just key number one, right? So as you can see with this example, price is going within that range. It's ping ponging. Trending, on the other hand, right? So the definition of trending: the general course or prevailing tendency, drift, to tend to take particular direction, extend in some direction indicated. So obviously, if you're looking at this chart, it's trending up, right? Well, we want to see our accounts trending up. And simple direction, right? So sideways action, consolidating, trending. Boom. Okay. So the trending conditions: high volume, right? Or higher highs, higher lows. So when these candles are closing higher, right? And then the low we're having higher lows, higher high, higher highs, higher low, higher high, higher low. Those are indication that your market is trending. In this case, trending long, bullish. Higher volume, those would be indicating, so lots of people are coming in and trading the action, right? You got a lot of volume in AMC stock, GameStop stock, right? Because you got the internet. The internet is like just shoving all these traffic. Hey guys, go buy this, right? Momentum usually comes with these. So like, for example, if you look at these at the left of the bottom of the chart you have these smaller bars, right? And so these smaller bars are usually, okay, maybe the volume is light. But when you start seeing these bigger bars right here, volume right here, higher volume, that's where the momentum is, right? And so when you start seeing bigger, so like this engulfing bar right here, engulfing candle, that's a sign like, oh, yo, we got lots of volume. I think big money is on the long side. So you know what? Let's follow the big money. Okay. And so that's where all this stronger momentum comes from. And you want to be on the side of momentum. If you're against the side of momentum, just imagine a train coming, right? You're not going to go against it. No, you ain't going to stop the train. You're going to hop on one of the cargo trains and roll with it. And so you want to trade with the strength, big candlesticks, bars, volatility. That's kind of, what's up, brother Reed? Volatility is the amount of the price movement within a day you can track. What's the volatility for the day? So for example, if Facebook was trading between $25 and $50, the volatility for that day would be 25, right? So you got to expect that's the amount of movement you'll see on the chart, right? $25. And then EMA crossing, we'll show more examples of what that looks like. EMA is a simple exponential moving average. That's an indicator. All charts have it. Pretty common nowadays. It's just a very good basic indicator that you guys can use to just help you gather a sense of direction on what you're trading. All right. So yeah, you want to analyze the time difference, right? So you want to use different time frame examples where you can see a bear run in the bull trend. So this big bull trend in the middle right here, you got the bears, which is the shorts, the red candles, the downward movement. They're having a little bit of, if you were to short up here, you would have made money. But overall, when you zoom out, the bulls, it's a bull market, right? So you want to use different time frames. The smaller time frames can run, but it doesn't necessarily that the overall trend is the same. So like I was mentioning, trend is a bigger picture. Usually trends, you'll see it on bigger time frames, daily, weekly, even a 4-hour. You'll see more establishment of a trend. So I'm going to give you this example. So we have daily bars. Each candle or bar is representing one trading day. Okay. So this highlighted part that I have here, I'm gonna go zoom in on the next slide, and you can see how different it looks, right? So, for example, this bull market, I mean this the gold market's been bullish going long, and so I'm like, okay, cool. But if you zoom in, right, this is a 1 hour chart within that same highlighted area. You're gonna see that there's opportunities to catch some shorts, some bear runs, even though the overall trend is bullish. You guys following so far? Thumbs up. Okay, cool, cool. So going back daily, this highlighted area, overall market direction is up, right? But if depends if you're an intraday trader, you have opportunities here to go short. You can go against the grain, against the momentum. Now, if that's your strategy, perfectly fine. There's counter trend traders all day, and they're killing it. So you gotta go determine what fits you, what you're comfortable with, right? Reed, you want to add anything to that, bro?
Oh man, let me just get caught up. But yeah, covering consolidating and trending, right?
Yeah.
Yep.
Consolidating training.
Let me get
Yeah.
my brain caught up, bro. Yeah, just
Oh, good.
keep at it. You good, you
Okay.
good.
Okay, good. So yeah, this is the bullish trend. And then inside, if you zoom into an hour bar or hour chart, then you're gonna see these different moves there. And um, what you don't want to do is go like, yeah, you can go against the trend, you can go short, but you gotta be very careful because you gotta know underlying, like, okay, hey, the overall momentum is long. I gotta be careful when I short. I'm gonna keep my stops tight, right? I'm gonna keep my um, what you call exits tight too. If you're in for a profit, don't expect to hold those profits long, because when price is showing signs of flipping or reversing, right, and you're counter trend trading, then you better just flip the switch, close the trade, get out, go on the longer end. Um, these small arrows are opportunities for you to go short if you're an intraday trader, and you can go short, no problemo. It's just for you to identify. We're coming from a analyzing standpoint. We're assessing just the overall market conditions, the sentiment. Okay, and that's how you want to just have that approach. You want to take it from the top, the higher time frames, and then start working your way into your what you actually trade. So I think Reed, you trade on the 1 hour candles, right? You make your entries there. Even you still analyze the bigger dailies, right? And of the 4 hour.
Yep. I start with the daily and then I go down to the 4 hour and then a 1 hour. And
Yeah.
like, okay, I'm caught up. But like, I don't know if Glenn said this already, but um, what's a run on one time frame may be a trend on another or lower time frame. So like, there's a difference between a run and a trend. Smaller time frames can be running, but it doesn't necessarily mean that the overall trend is the same as the run. So
Yeah.
that's kind of like what Glenn is getting into right now.
Yeah.
Sorry if I sound super repetitive.
There you good, bro.
Uh,
Cool. So, I just took some examples of what some consolidation and trending markets look like. So this is a real chart. This is, I think, the 2 year note. It's a futures, it's bond trader. So if you start from the left of the chart, like you just see this like whipsaw motion, right? And so it's very tricky to trade this. This is a long-term chart, so of course, when you're zoomed in, so like this is what, 6 years of data over here, 7 years. If you zoom in, like where we zoomed in with the gold one, you can catch these swings and make money, no problemo, right? But you got to watch overall, it's consolidating, and then it wasn't until 2016 where the bears started taking strength, taking over. and showed strength. And right here, boom, that's when it just tanked for almost a year, from 2016, end of 2016, all the way to the end of 2017. You see there's a trend right here.
And sorry,
So
is this a daily?
this is a daily chart. This
All
is
right.
over a span of 7 years. Um, and it's just showing, the point of this is just showing like when you have a consolidation market transition into a trending market. And then vice versa, it goes into trending and then it goes into consolidation again. You guys follow? You guys following so far? Okay, cool.
Yeah, nice. Yeah, to like go off of that, the way I see the market is basically uh the market trends and consolidates. And if you're kind of confused, are we in a consolidation phase or a trend phase? You find that out just by zooming out and seeing the bigger picture. And then if you're getting prices like just whipping up and down real fast, like within days, hours, depending on your time frame, if you're constantly experiencing losses, the way I look at the market, I take a step back. And if I'm taking multiple losses, between 3 to 5 losses in a row, in my style of trading, that's the market is consolidating to me.
Hmm.
So I mean, it's all dependent on the way you trade, but overall, that's the just two. It's easy. It's two market conditions. It's trending or correcting, consolidating. So
Yes,
simple when you
yes.
look at it that way.
And this is another example of just, if you're zoomed out all the way, it's a daily chart again over the span of 6 years. I think this is a euro dollar. Um, is you can see like price gets all choppy and sideways consolidating, and then it'll just start running, it'll start trending. And so like over here on the stop where it says high of 1.719, market consolidated for a short period of time, then dumped, right? Peaked up again and then started just overall dumping. And so there's going to be a lot of opportunities to take if you're on the right side of the market. With another thing to look out for, I think there's like a sub cycle, like what we were talking about, like a bearish neutral read and then a bullish
Yeah, yeah.
neutral. Yeah, so like if you guys look between 2014 and 15 where my mouse is, how you can see it's whipping up and down, but overall it's kind of tilting downwards, right? And so that's another form of consolidation and something to be kind of aware of because it'll be a tricky market to trade.
That I would like consider that bear neutral. It's in an
Very neutral.
overall bear market
Hmm.
after that high, but then it's correcting just up and down, up and down. That to me, it's neutral. It's not really going up. It's not really going down. However, since we're in a after that strong bear trend there, it's considered a bear neutral in my book.
Yeah, yeah. And then we just fast forward, like we have the low of 1.140, and look what happened prior. We have just a crazy drop, right? But prior to that drop, market was going sideways. You see that right here where I'm circling. So those are two conditions right there. Market's going consolidating right here, tanks, pops up,
Neutral. There you go.
yeah, yeah, and then it loads up again, and um, there's not just one contributing factor and why it does it. There's all these different moving parts in the market, right? And so you'll like don't even. I mean, for me, I don't even waste time trying to figure out why a market tank, right? Or why it went up, because all I care about is like, oh, boom, I see a trending market. Let me jump on that. Let me try and make some money, and let me hop out after, you know.
Just straight price action. Yeah,
Price action,
that's
and
it.
and that was kind of a gist of what we had planned. I mean, to wrap it up, I mean, to recap, you got three phases of the market, or two actually. Just market goes sideways or it goes up or down, and you want to start with a bigger time frame, zoom out to get an overall feeling, be like, okay, Facebook is trending up right now daily. Then I'll zoom in, right? And then maybe on a 4 hour, 1 hour, start to look for setups, maybe potential uh, reasons to enter into the market. right? You already set your overall market condition that's long, bullish. Okay, cool. Now let me go look for a bullish entry when I zoom in. Okay, cool. Now let me establish where am I, how much am I risking, and then where is my exit, right? And boom, you already have your trading plan in a way. You know, there might be more. People have different things to uh, figure out, but that's essentially what it takes. Knowing where to get in, knowing where to get out, and then if you have a runner, figure out what's the best way to manage it, right? Do you want to share any charts, Reed?
Yeah, sure. I'll share some. Just see how I look at the charts. My bad. I came in late, guys. I had to pick up the wife from the airport, and then Honolulu traffic, man.
Yeah.
It's messed up. Waikiki traffic. So I'll just share a trade that Glenn and I were actually talking about on Sunday, and this is Euro Swiss. Overall, so I got the daily down on the bottom right here, the 4-hour on the bottom left, and then my main chart is this hour chart. And this white circle here, you see, I circled this because this is an example of a correcting market. So if we zoom in, this is a bull run. This is a bull run. It goes up and it rejects my EMA, but then it drops again. So overall, this is a bear trend. It's in a bear trending market. If you look at the daily, you could see these strong bear candles here. So we're in a bear trend. So if you wanted to like counter trend this, I'm not saying you can't, but it's just the probabilities of you longing. So this is TradingView, by the way. It's a really awesome software to use.
Free to start.
Yeah, it's a free software to start.
Yeah.
And so like if you went long after this bullish engulfing candle here, you would have gotten taken out for your loss because the overall trend is bearish, but this little run is bullish. So it's a great example of that. You want to trade with the trend. I'm sure Glenn has covered that. Glenn actually has taught me like a lot to trade with the trend, and it's helped so much, saved a lot of money, and also helped me make more profit because of Glenn's wisdom. So this is just an example of a correction here. And then like if you look at the 4-hour, it's just a bear neutral correction, overall bear market from here. And then it's just neutral. It's going up and down. Then it drops again, confirming that it's in a bear market. So after seeing this two strong bear movements, it corrected again. So I'm going to circle this one more time so it's kind of a little bit more clear. So this right here. So this is a bear neutral market again. It's just correcting or consolidating. I don't know if you guys, I don't want to confuse everyone here, but like a correction / consolidating, it essentially means the same thing. So like 3 words: consolidation, correcting, neutral. They're essentially the same thing describing the one market, which is what these two circles are. And so Glenn and I would capitalize on it. Glenn got in a little earlier than I did, but I needed this confirmation. It's really tight flag here. This is a bearish channel, bearish flag, the one that my mouse is hovering over here. And then the bears took over and triggered me, and I had an entry order here. So that's the way, that's a perfect example of like trading with the trend. And so that's capitalizing off of bearish momentum or the trend. So
Love it.
but other than that, yeah, that's
Talk about those 2 squiggly lines you got on there.
oh,
Because we kind of touched on EMAs.
these two yeah. So for me, this is the 50 EMA, and then this blue one is the 100 EMA. 200 EMA. 200 shows how much I actually look at the EMAs. But what's up?
Oh, no. Yeah, we were just talking. We touched on it earlier. Is like how those are indicators and those are available for people to use, and just talk about it on how you can use it to identify whether the market is starts to trend or still in a sideways consolidation phase.
So like, yeah, I kind of briefly talked about it. If I'm like placing trades and I'm getting stopped out quite often, then to me that's a corrective market. But also I wait for the EMAs. So if like the EMAs are, this is a good one, is for me when the EMAs aren't being respected. So it's kind of being respected here. You see how price comes up on this hour rejects this 50 EMA and drops back down, rejects it again and drops back down. So to me, it's respecting the 50 EMA. So when it's not respecting the 50 EMA, if we take a look at this 4-hour chart, this is a good example here. Try and maximize this view.
Yeah.
Option. Here we go. So when we look at this, so EMA is just one piece of the puzzle, one piece of my indicator that I look at. To initiate a trade doesn't make me not trade, but it also will just give me a warning sign. So if we're looking at this box right here, you see how price is just constantly like breaking through, breaking back down, breaking through, coming back down, breaking up. It's not, doesn't want to go up, and it's just constantly rejecting and testing and going through, breaking through everything. To me, this is not respecting. So it also displays perfect display of a correcting market or consolidating market. It doesn't know what it wants to do. Overall, it could be a bear neutral because you got this bull trend here. I mean, bear trend neutral. Because you got this bear trend here, it dropped. And then now it's just doing this huge correction. And then it'll drop again. And so overall, this is technically a bear channel but you won't know that when like the live market is happening. You're going to know this after the fact. It's easy to look at the market and analyze it after the fact, so it's easy for me to tell you like, yeah, this is a bear market. But if we're seeing this bull, like, if what's really cool about trading, you could go back in time, back test, and just go back.
Oh, look at
So
that
like if
magic.
if you saw this, right? If you saw if you saw this, you're like, oh shoot, this is a bull trend. Like, this is a change. It's a reversal play. I like go long on this one. It may not work out just because like you're in a bear trend. And I like reversals. I actually trade a lot of reversals, but hold on, I'm trying to find the fast forward button.
What a tinks there.
Not bad. I don't know what it is.
Tell Siri, fast forward.
Button. Go next.
Oh, the bottom right? It says speed.
Oh yeah, you good.
Right there.
Yep. Boom. Okay, here we go.
Boom.
So if we just go up, you're like, oh shoots, I'm in long here. Reversal, you get stopped out, So that's one sign. Okay, let's say I got stopped out. It'd be like, okay, let's try go short now. Since it is a bear market, it's bear. Okay, let's try go short. See if we get in, huh? So I don't even get in, so it wouldn't be a loss. So then now it's going long again. At that point, after two trades like that don't go, and then the 50 EMA is just being rejected, I'd be like, okay, I need to take a step back, see what's going on in the market before making any decisions here. So let's say I went long again, just to go long, for sake. So you would have hit 1%, but then it immediately fall down and then take you out depending on a break even, if you know how you manage it. So at my stage, I would know that, okay, this is kind of a correcting market. If I took these three trades here, one's a loss, one's a break even, or one's didn't even go in, and one's a break even, maybe profit, minor profit, I would stay away just because I'm looking at this and then I'm seeing what the market's doing. It didn't create a higher high. That's another thing. I don't know if Glenn covered, but when the market's creating a higher high in the market, then the trend is long. If it's creating a lower low, trend is short. It's basic stuff. You guys may or may not be familiar with it. Simple stuff, but that's also a way to tell if you're in the market. I mean, in a correcting market, if it's not creating any lower lows or it's not creating any higher highs overall. So real simple, but so yeah, that's what I got for now. That's all I could think of.
Solid. I mean, that's a good piece. I think showing it on a live chart, well, somewhat live.
Yeah, that was a little back. Well, this is live, so I mean, it's a good example of capitalizing on the trend.
Yeah. So yeah, overall, it's just identifying what market phase or trend you're in. You're in trending sideways, and then from there, use your trading plan, look for opportunities, and then hopefully your analysis will get you on the more correct side of the market, and just roll with it. That's simple. Until it's not.
So like a lot, the guy and I we read a lot of trading books, and you'll find it like in the Mighty Network of like the books you recommend, and a lot of these books say So I'm reading psychology, mastering psychology of trading, and you talk about like your trading style needs to be able to handle all types of market conditions. So if it's in a correcting market, you need to be able to make trades or no trades and just stay on top, like stay profitable, and you want to be able to capitalize on trending markets. So let's say that means increasing your stop loss or tightening your stop loss in a trending market. So you want to be flexible with that, like have two types of trading
System.
styles for the systems for the market, but it doesn't mean like, okay, I'm going to throw out the EMA during the trends, or I mean, honestly, it could be totally up to you guys how you do it, but just keep that in mind. Like you want to be able, your system should be able to trade through all kinds of market conditions.
Mm-hmm. The word robust. That is the
Yeah,
word to look
that is
for.
a key word.
That is the key word. If you wanna, you have to find a strategy or a trading approach that is robust. You could take it through every season, every pandemic, and still come out profitable. Um, and yeah, like just to, I mean, kind of wrap up the market consolidation versus trending. Really good info right here. Rewatch it, take notes. And this is just one piece of the puzzle, guys. I mean, one slice of the pie for your overall trading market. This is not, we're not saying like this is all you need. No, it's one piece along with the candles, along with what we were talking about, along with the journaling. That's another piece. Very good piece, along with all the other things. Um, you have to combine all that with your expertise, your knowledge, and approach the markets. Good,
Holding.
good. Any
Yeah.
questions, guys? What resonates
Yeah,
with you
ask
guys so
away,
far?
ask away. I hope
Yeah,
this is beneficial to you guys. Hope you
yeah,
guys learned something. You know, we'll be providing a lot more value
yeah.
that we think is
If
valuable.
if you need me to go repeat some section that we went over, we can do that. But yeah, any questions, guys? Floor is yours.
Do you guys always use indicators, or do you got to a point to where you can just read the charts naked, so to speak?
But you want to take that one?
Yeah, I can take that.
Answer after.
Yeah, I can totally. So as far as indicator goes, I keep mine at bare minimum. I gone through that phase of having 10 million uh, indicators, right? So that I can share what my real chart looks like when I look at the market. Go see. So this is Thinkorswim. Um, it is awesome desktop platform. So on a trading on my chart at least, I have ATR, average true range at the bottom here, and then I have my Keltner bands, and that's it. Price action. So I like when I analyze, I will take away my indicators that sometimes and just look at it. What is price doing? Because at the end of the day, man, like it's all about the. I'm a technical trader. I focus all on price action, and you can just clearly see Nasdaq is up, so I will be going long. Plain and simple, right? And so yeah, I use the Keltner bands and ATR. But as far as like these, like I can trade without these. I use these as a accompanying information to. I put all more weight on what the price is doing. Um, and so yeah, I think Reed, you got the EMAs right and
Yeah, I
volume,
use
volume.
EMAs, and I recently added volumes of 2020. So it's a fairly new indicator that I add, which is, so these bars down here is volume, and I'll actually use the 1 hour. I don't even do the 4 hour. I don't know why it's there, so I'll remove that. But like I like it as clean as possible. I've done it where it's like completely naked, no EMAs, just raw price action and candlesticks mainly. But I found that like through back testing and journaling that I like using the 50 EMAs. I realized that like when I enter the market, the 50 EMA is usually in agreement with my decision. And so like I just I use the 50 EMA mainly on the 1 hour and the 4 hour, not even on the daily. But yeah, mainly raw price action, but and patterns. Patterns is like my goal, like ascending channels, descending channels, um, and like the market condition, which is just the trending and consolidation to see which way the market is gonna go. So just like putting them all together is the way I trade really, but I could trade without any indicators. But I think just it gives me that slight edge when I do use the indicators. So yeah, that's a good question, man. I like that.
Yeah, I mean, to add to that, like,
Yeah.
what indicators you use now may not work for you later down the road,
Yeah,
because the
good
indicators I
point.
started with, I think I went into MACD and RSI. What else? Some volume bands or something. I don't
I
forget,
used to
but
use MACD as well. Bollinger Bands used to
yeah,
use those starting off.
right.
And then, there's a point we got to be careful with indicators where like we depend on it. Like, oh, I'm not gonna. Well, I don't. I shouldn't say anything. So I'll give you an example. I started off with a lot of indicators, and my friend didn't start off with indicators, and we kind of went are like crisscrossed. And I am now trading like more raw naked markets, and he has literally like 20 indicators on his charts, and he's like, I need to see everything because they all tell me what to do with the market. I'm like, hey man, if that works for you, then fuck yeah, that's awesome. All power to you. But I mean, it just depends on you as a trader on what kind of trader you want to be. So
Yeah. And then the indicator is not only on the chart, it could be the news, it could be the latest rumor, it could be
yeah,
reports. If you're using the payroll, the announcements, non-farm payroll as a indicator to trade off of, if you're trading off events, anticipation of the Fed talking, that is an indicator. So, all these different things are you can use at your disposal.
dude, that's a really great point. NFP. So like, if you guys don't know, non-farmers payroll, that's like the biggest market mover next to Fed rate announcements. So those two are like the major announcements specifically for foreign exchange. So
And
for the forex markets, you want to be careful with NFP and Fed rates. Sorry, go
eh,
ahead. Go ahead.
no, go ahead. NFP. I think, just to clarify, that's isn't that the job report? The amount of um,
Yes, that are not farmers basically. So like every industry. I think it's
yeah,
like every industry except like five or something like that. It's basically unemployment rate almost.
unemployment rate. Yes, that was a word.
Yeah.
Unemployment rate.
That one's a key one too, but I've seen like unemployment rates come out and it doesn't move the market as much, but I think NFP moves it a lot more. But I mean, like Glenn said, he's a technical trader, I'm a technical trader. Even like I'll place a trade and then I'll realize like, oh, NFPs just happened. But like I already placed the trade without even realizing that the news announcement was there. So I mean, it just depends. That is an indicator. That's a really good point. News is an indicator. It's fundamental versus technical trader. Well, we consider ourselves technical.
Yeah, yeah. And for example, like you just reminded me, Reed, you were in that Euro USD short, and then NFP came out, and it just amplified the move in your favor. You
Yeah,
know,
was that an NFP, man?
I think, or it was one of the
It's like
reports, dude.
borderline lucky, you know what I mean? Let me try to pull up
The
that. That's a
stars
really good
align.
example. Yeah. What trade was that? That was a fun trade just because I'm like, oh shoot, it moved heavy.
Yeah, and like, yeah, so like announcements. If you're on the right side of the market, if you're on the correct trending side, those announcements will just freaking blast off.
Yeah. So this is an example of what Glenn was talking about. This is Euro USD. I shorted it. I liked everything in the market as far as technical indicators go. There's a pattern here. Is it a descending channel with after a bear run? This was a reversal because overall it was a bull trend. And then I didn't realize there was a news announcement, and that's why you see this huge volume here. Sorry, this is a screenshot, so I can't go backwards and stuff.
Yeah.
But yeah, so like I didn't realize that there was a news announcement, and so like that's what we were talking about. Like technicals, like kind of, you don't need fundamentals to enter the market, I would say. But again, it all depends on you. If you like tweets from political people and you want to trade after tweets, that's an indicator.
Yeah.
So that
Yeah.
one was Euro USD short on
Yeah.
Wednesday.
Yeah, I mean, Reed identified the trending market at the time. Well, it was a bull trend, but he identified the bear run, which is the trending part of the trade, and then he took a position and it went well. So awesome, man.
So
Awesome,
I mean,
guys.
you could consider it luck. Like, is it luck? But it all comes down to probabilities, like probable and what's possible in the market. And Mark Douglas, if you guys don't know, Trading in the Zone, one of the best books out there regarding trading and psychology, and he talks about what's possible in the market and what's probable. Probable is like you have a defined edge, and so like mine, there was the pattern there, there's everything there, and then the news announcements kind of just the news announcement could have triggered me in and gone straight back the opposite way, and I would have accepted that because you accept the probabilities of the market, and it was totally probable that I could have lost that market. I mean, lost that trade. So don't think that like, oh, that's so like it looked perfect. Like that was like a 1 in a million trade right there. Like all the stars lined up. So yeah, just want to level that out there.
Cool.
But yeah, man, that's
Good, guys. I mean, I hope this was value of you guys. Thank you for your time again. If you guys got to bounce, you guys can bounce. This is recorded. You guys can rewatch it if you want. It'll be uploaded soon, hopefully, in the Mighty Networks. Yeah, like I said, go use Mighty Networks for what you guys want. There's a lot of content there. We're consistently pushing more, creating more content. You'll find this episode in the Traders Lounge under. If you go to the main page on the left side, there's topics. Why am I not sharing my screen for that, bro? Jeez.
Yeah, I know you're talking
Jeez,
about
you got technology,
it.
man.
Okay, right on. I don't know what you're talking about, but okay.
Where is it? Oh, see, you gotta go load it up. Okay, Hawaii Trading Academy. Bangs, banger. Okay, cool. Topics, right? So we kind of just numbered it for you guys to just go through 1 through 13. So these Trading Topic Tuesdays are gonna be here, and it's kind of in order. So from episode 1 at the very bottom all the way till now, and then so don't forget to hit follow on that so you guys get the latest notification when it's uploaded. Yeah, these topics are really good. We're a weekly watch list. That's something we put out we record on Sundays and prep you guys for the market upcoming. So what we're looking at as far as these are potential trades or trades we're already in. We send that through email, and then we create our watch list. We record it and go from there. So yeah, when you guys have time, go through it. Really good stuff, man. We could just blow it up. Tell your friends, family, whoever you think is interested in trading. Bring them in.
Legit
Bring them
trading.
in.
Like this is like we're not a signal service, but there's also, so if you guys don't have a journal, like a template, first thing you do, start journaling your trades, whatever trades you took this week or last week, this month, start journaling it. If you don't know how to set up a journal, there is a template on Mighty Network under downloadable files, and that's like, it's so valuable, guys. Like, take it from me, I started in 2013 and I didn't journal, like have an actual journal, until 2017. So in my mind, it's almost like I wasted it. But I mean, I didn't really, because I had a lot of experience. I learned a lot. But by just me not being able to look back and seeing like what worked and what didn't work, it hindered myself. And I don't want that to hinder you guys. Like, journal everything, learn from your biggest mistakes, because in the end, you guys are going to be able to teach yourselves. Essentially, you're going to be like, man, why did I make that mistake? That was a dumb mistake. I shouldn't have traded that. And that could speed up your process from making the change now or versus making the change a year or two later. If you make that change now, man, you're gonna save a lot of money. You're gonna make a lot more money.
Yeah.
So that journal downloadable is just, it's a very rudimentary journal. It's not advanced at all, super easy, but it's like the basics. If you guys don't have that, like
Absolutely.
start journaling your trades, even if you guys are only doing like 1 trade a month. Man, journal that shit, and then like journal it, and then dive deep into that one trade and be like, okay, why did I do this? You know, so
Mm-hmm.
Yep.
Good stuff, man. Good stuff.
Did you? Well, what are we covering next week, Ben? Did we talk about that?
I think. Oh, introduction to patterns. That'll be next week.
Ooh, okay.
Oh,
Oh, I like it.
that was a little bit of.
Intro to technicals.
Yeah,
Okay.
technical patterns. So we'll be touching on that. I think Reed's gonna be charging that one because that's his arena.
I need your backup though. Hey, I'll make sure that the wife isn't coming in on a flight.
Little jab.
Yeah, so I won't be late.
All good, bro. All good. Yeah. Yeah. Was this good, guys? Was this good? Valuable. Good. You know,
Yeah.
I know. Time is the most important to everybody. So, I hope this
Thanks
was
for
a
giving the
great
time, guys.
time
Yeah.
to spend your hour with. Hopefully, you guys learned something. I mean, I hope we are expediting your process right now. So, good. With that being said, if you guys don't have, you guys can always reach out to us anytime on the Mighty Networks or DM us or whatever. If you have any questions, so we'll try to guide you guys.
Sure.
Good.
All right, guys.
All right, have a good
night.
one.
Sounds good. Thank you guys. Be safe. Oh,
You
guys.
too.
All right, bro. See you.
See you guys. Thank you.
Thank you. Yep. Thank you, guys.
Thanks.